Hello everyone, welcome back again. I have received multiple questions, clarification on one of the high profitable strategy, which is high probable and success rate is more than 90%, which is having out of box adjustments. Okay, so I think they're complex, of course. So you need a lot of practice. It's very obvious that you will have a lot of questions that was expected. So I have made some abstract simulation videos for 4 weeks. That's a weekly strategy, weekly Ironfly 4 weeks, two in Hindi and two in English. You can go and have a. I will put it in the description. Those links again. You can go and have a look again. First, I will explain the rules clearly here now, point by point, because that's where the confusion was. And then, after explaining the rules, you can have a look into those strategies in the simulation. Then you can understand more clearly. If you still have some doubts, come back and see this PDF or note down these points, whatever I explain in the PDF in this video. Then you can see that multiple times. That's very high probability strategy. Maybe I can also plan for one hand holding week, that I will make the Ironfly and then make the daily adjustment video every day in the morning, so that like we are doing it for monthly and weekly combo. That's where you can clearly learn and understand. You get doubts get clarified there. So this is very high profitable strategy. Let's get into the rules. Basic rules first. Per lot, 2.5 lakhs if you are practicing with one or two lots. If you are going for the earnings like 5 lots, 10 lots per lot, have at least 4 lakhs. Okay, because the drawdown, we don't want to see much drawdown. We want to do it very calm. Okay, and let's start this Ironfly between 2:30 to 3 p.m. on the expiry day. Say this is today is 29th, 20th. Okay, 29th expiry, that is third Thursday. Next expiry is say 6th of April. This is 29th March. On 29th March, 2:30, between 2:30 to 3 p.m., you create this Ironfly. Okay, that's a basic thing for this particular week. Okay. Okay, for base adjust Ironfly. So the base Ironfly, whatever we have here, no adjustments required initially. I'll tell you when you have to exit from the P buy and sell X. Otherwise, you don't need to do any adjustment for this base one. Right? So this is out of box adjustments. Coming back to the rules, this is done only if the cell lag. When do you adjust this base one? This is very, I mean, not this one. This point is very rare. And if the sell lag and buy lag difference, this will come in almost close to 1 day left or on the expiry date. This situation might come. If the difference between buy lag, this is buy lag P, and this is buy lag C call, and this is select put, select call. If the difference between these two is less than 20 premiums, are these two less than 20, so we need to exit. This situation comes very rarely, or maybe in the last day of the expiry, exit it. Not much use here. Why do you take unnecessary tension? So you can go and see in the you can see these rules, note down, and then go in the simulator. I'll put the description and also in the I button that links. Okay, video links of stress simulation. Coming back to the rules, so this is done. Now we will go to advanced adjustments. So this is where the confusion, right? So let me explain, and if you go and relate it in the abstract simulation video, it will be clarified. If the difference between cell X is 100%, 100% why I mentioned, say if P cell and C cell in the straddle, if this become 150, see we have initially sold it for 100 and 100, both will approximately, and this become 75. What's the difference between these two? 75. That is, this is 100% more than this. That's why I mentioned as 100%. When this situation arrives, so this side premium is more. That means what? Market is moving this direction, and this is getting less and less, and we are in the loss side, right? Let me explain here. Let me go to the notes itself. Okay, if this is become 150, and this is 75. That means what? Market is going in this direction, falling, and there is a we are in the loss zone territory, right? So here we have loss, here we have loss. The market is reached this territory, and when you see this situation, 50%, 100% less, this is 100% less than this. Come back to our rules. So when this is 100%, the you can just start selling from the opposite direction. Extra should sell. We start selling, and that extra sell should cover 50%. So I'll explain what is 50% and 100%. So to cover the 50% of losses after the break even, how much do we need to sell? So generally the lot numbers we have to discuss. If the base ply is having one lot, if we have made with one lot, then the extra sell is also one lot. Okay. Say if this side is having total 5,000 loss from this point onwards, right? Break even market is coming this direction. So one lot should cover 50%, right? Divided by 2. 5k divided by 2,500. So per lot, 25 per lot, right? In the bank nifty. Nifty it varies. 50% of everywhere 50%. So how much do we need? 2,500. 100 premium. I'm just giving an example. So you sell the extra lot with say around 100, and you also hedge it. You will see in the simulation. You can see that you will sell this extra call to cover this. Okay, that's the plan. That's the secret behind that 50%. Let's look into the next rule. If extra sell is decayed by 7%, exit and sell closer strike price to cover 50 to 80% of the remaining loss after break even. Why I mentioned 50 to 80%? So first you have targeted this, and second mentioning 50 to 80%. Huge range, right? Okay, so one thing I'll explain now, and second thing you will see in the simulation videos which I'm going to link. Let me explain that point again. So once that Ironfly first time you sell 50%, and this is further keep on going down, market bank nifty is falling. I'll generally do it for bank nifty, so you can also do it for nifty. Not a big problem. So you can do it for nifty. It will be more stable, and maybe profit will be little less. We don't know. Maybe you can try. If your psychology works better for nifty, you start doing in the nifty. If market, I'll say market will keep going down. So this 50 rupees whatever you sold extra, apart from the original call, this will decay by 70%. That means, so initially you can take a calculator, later roughly means 50 into okay, 70% decay is 35. That means remaining is 15. You will be left with 15 only this. So but market kept going down. Do you stick to this only? No. And goes the exit out of this, and 50% are you initially targeted 50%. Now so you have exited at 15. You may be having some more loss in this, right? After exiting this, whatever loss is remaining, so maybe your Ironfly would have become like this. The market is here. Whatever is remaining here, target 50 to 80%. See, the bank nifty is too deep, it is coming down. 50% when the premium, opposite say premium is put, call, and this premium is very high, like it has reached 700, and it has reached some 200 or 300, and we are selling how much? We are going to sell more than 50% here. In this case, I suggest you sell 80% of whatever is remaining. Or maybe if it becomes 200, no doubt you can sell 80%. You have a look in the simulation, you will get more clarity. So or if you want, if the market is having too many reversal volatile, if it is reversing and going down, and after some point again going down, so within this range, if it is playing in the volatile way, so keep it 60%. Don't fix to some 50% only I have to sell. In that case, what happens? You will not learn, so you will become like bookish. That's why I'm giving range. So that may not give good profit. To have more profit, I'm giving this range. So that's why I said 50 to 80%. So I hope you are understanding. Go and see the actual simulation now after listening to this. Continue this process if the market is trending in one direction. This is to increase the profit. See, market is kept on going in the same direction. Okay, already you think, okay, you have covered this loss and it is in profit. Let's not do anything from here. Let it go down. See, this becomes like this at one point. It's a fixed profit. Even if it is going down, down and down in market, you're not doing anything from here. That's foolishness, right? Or maybe you exited your C spread when the once the buy and sell like difference is less than 20, and after that your fly looks, after exiting one spread, it looks like maybe like this. Okay, so let me do it properly. So once you exit, it looks like this, right? There is a profit, of course. We're not doing anything and it's going down. It's not reversing, right? You should not do that. Keep selling. See, based on the premium here, maybe you can sell 30 rupees or 40 rupees for OTM just to lift this higher and weekly. Good, right? So you don't have to sit idle. And even if it reversing, you're selling from the far OTM, it is coming to the high profit zone, and this will be decayed by then. Or even if it is not decayed, you can. I'll tell you what is the stop loss. I will come to that point. So we'll target only how to increase when it is going in the trending direction. Keep lifting. Okay, this point is done. And reversal, the stop loss is 150%. Now again, the percentage, don't get confused. And if it is 100 premium you're selling, and you stop loss is 150. Okay, I'll explain one more point and go to the drawing. If the reversal SL sometimes is 170 to 200. Why 170 to 200? Based on the premiums and based on the M2N fluctuation, opposite premium. I'll tell you what, and you will also see that in simulation live. Sorry. So we are in this profit zone. Say, both are at one point. Maybe this is in profit and this is in higher profit, or maybe you will have this situation. Maybe other side also possible. When the market is reversing, you have extra C, or in this case only one C, original C you have exited. In this case, the stop loss I would like to take 170 to 200. The reason, I'm sure this P premium, opposite premium, is very high in the sell leg, say 1000 or 1100, and you have sold for OTM for 50. Do you exit at 50%? That is, or 150%? That is 75. 150% of this premium. This is 100%. Another 50% of it is plus 25. So that's why I'm saying 155%. You can call it as 50% extra. So you can name it in a different way. And I don't want to exit at this place because I have I premium here. I would like to exit either at 170 or even at 200%. That is, let it come to 100. I'll exit only if it is 100. And if it is playing in the same range, I will go for and sell 50 again because I have very good premium here. And let's sit quiet until this is like becoming very less. I'll keep doing that to lift my profit. But at the same time, you will be entering into this high profit zone. So keep staying away in this. You don't have to come closer and sell, even if it in the high profit zone. Okay, I hope you understood why not 70, 50%, why only 20%. In a normal situation, so if it is in this case, maybe you have 300 in the P side and say 150 in the C side, take and you have an extra sell. It's gone like this and again reversing, take 50% stop loss. In this case, that means 50 become 75. That is, sorry, I'm also saying 50%. Okay, you can name it like that, 150% of this premium. This is 100% and plus 50% is 75. I hope you understood. Any confusions, just put it in the comment box. I'll try to answer in one other way. Okay, so that's the advanced rules 1. Now we have one more advanced rule that will further improve your profit. That's why this is high profitable strategy, out of box thinking. And we are not going to see any charts, no charts at all. Okay, you can see in the simulation which I link, I have not seen the charts and still we were able to make very good profit. But yeah, to make more profit, high profit, you also need to learn this. It's just one time if you understand. Until while learning, this is a rocket science. After learning, this is like a simple rule for you guys. So little confusing what I said. I'll explain in the ms paint, then we'll go and read that sentence. So at one point, so this p and this p sell buy, this is sell, and here we'll have sell original one, and we might have taken one more according to our rules to match or to cover this loss or whatever. And for this also we'll have buy, and for this also we'll have buy, right? Somewhere call buy and call buy. Now at one point what happens, even though this is in profit, to increase the profit we'll have to take one decision. How? I will just sum these two. When you see in the real time you will get more clearly. Say this sum becomes, say, 90, and I'll also add these two. This becomes, say, 15. So minus this, how much? 75. And the difference between these two, maybe say 250. Is it not too much difference between 75 and 250? A lot of difference in the delta. Lot of, if it is continuous going down, you may not achieve good profit here. Or if it is in the loss, still having little loss, you cannot keep like this. Until what point you can bear this, or until what point you can wait. I'll say when this P side is 250, C side should be at least half of that. Okay, at least half of that. That means how much? Roughly, it's 125, right? But what did we had? We had 75. How do we adjust in this situation? So let me write again. This is P side. This is C. You had two cell legs, and this has. So this one is like still some 60, and this is like 15 left, right? Exit this to make it 125. How much you needed? 65. Sell 65. This additional lot, isn't it? Closely that one. Either you can make it as 120 or 130. It's not exactly the same. Okay. Now you can, let's go into the, now you can read these complex statements. Read it down. Now you will understand. Sum of that P cells, if it is having two, if it is having only one, that's why you have to do it with only one lot, sorry, one legs. And if it is having multiple cells, multiple positions, strike price cells, you have to do it for that. Okay, you have to match closely the higher premium, not the lower premium, higher premium. What we do? We are going to match the higher premium. So I hope you understand that point. Now let's get back. So 1:1. If your Ironfly is having only one lot, you go with extra one lot cell. If it is having two lots, extra two lot cell. That's what 1:1 means, to cover the 50%. Okay, I mean this if it is becoming 100% difference, and how much? 50% of the loss to the opposite side. And reverse, once it is decayed by 70%, come closer and continue this process if market is trending to increase your profit. On reversal, in the normal condition, will take 150%, that is 100 becomes 150, you will exit. And in when there is a more premium in the opposite side, C or P, say if it is, yeah, same goes with the other side also. I was explaining P in the P reference. Other side, you take the same rules. So if you have opposite premium is very high, say around 1000, sometimes you'll get it more than 1000, then you can also wait for 170 to 200%. And we have seen advanced rule part 2 also. how to match at least 50% of the overall premium from opposite direction. Now you can go and see the simulation videos. You will understand more clearly. See it multiple times. If you got this, that technique, if you got that secret, you will start earning very high in the weekly, any week, what either it is volatile, range bound, or it is trending. In all the condition, you will earn. So if you can suggest me any week, we'll go and try that. It's more than 90% of the times you will win. Okay, I think so. You like this video? If you think it's very useful, keep sharing to your friends. Like, subscribe. Thank you for watching. See you in the next video. All the best, guys.